Alright, welcome everybody. In this video, we're going to be taking a look at a recent buy I made. Recently, I purchased $5,000 of this stock, and we're going to be taking a look at its financials. We're going to be breaking down its business model, and I'm going to be letting you guys know if I still think it's a buy. If that sounds like something you're interested in, then stick around. But before we get into that, we'll do a quick portfolio update so you guys can see on your screen right here. This is my dividend portfolio. And if you haven't noticed, we're in a series right now called Road to 1 Million, where I track this portfolio that you see on your screen right here all the way to $1 million. So year to date, the portfolio is up 45% or $28,000. It has been a great year to say the least. If we take a look at the all-time view, you can see that the portfolio is up 51% or $30,000. Making you guys wait no longer, my recent buy is none other than United Health Group. Some of you may be familiar with this company and others may not. But regardless, we'll be taking a look at it anyway. As you can see, I bought in an initial $5,000 of this company, and that gave me just under 10 shares and is a portfolio diversity of 5.5%. My average buying cost was $541. Now, if you're unfamiliar with United Health Group, let's take a look at a video to explain just that.
United Health Group has the highest price per share of any company included in the Dow Jones Industrial Average, and it's the 10th heaviest weighted stock in the S&P 500. That means not only is United Health Group the biggest healthcare conglomerate in the United States based on market cap and revenue, it's even bigger than JP Morgan Chase, the nation's largest bank.
One of the interesting things about United Health is that they've done a roll-up strategy. They've been buying pieces for years of different types of companies.
Wall Street is optimistic about the company's future, with 22 of 25 stock market analysts covering United Health labeling it a buy.
If I had to pick one stock, only one stock to buy, I'd buy United.
United Health's annual revenue has increased by more than $100 billion over the past decade when adjusted for inflation.
Now I'll just pause the video right there real quick because I just want to highlight something real fast. When they're saying United Health's revenue, I don't think they're actually talking about United Health Group's revenue. It might just be United Health, which is a conglomerate of United Health Group. They essentially own it. So they say in 2022, the company made in revenue $250 billion. But if we check Qualtrim.com, we can see that the revenue of United Health Group was actually $322 billion. So substantially more than what they're reporting, if they did in fact make a mistake. Let's get back into the video.
For inflation.
United has had superior stock performance over everybody else for two reasons. One would be strategic vision, and the other strategic capital management.
The company managed to do this through a unique acquisition strategy.
United Healthcare is much more than a health insurance company.
But somewhere United Health may be growing too big, including the Department of Justice.
It's giant. It's just core health infrastructure at this point in America. It's too big to manage.
Within healthcare, I think there's really valid concerns around excessive consolidation in parts of the business and that leading to higher prices. I do think that they are becoming more and more utilities. And so consequently, I think they're going to have very large market shares because a number of the services that they provide, you wouldn't want redundant services through the system.
So how did United Health Group grow bigger than the nation's biggest banks? And what does that mean for consumers and the U.S. economy? A United Health customer could feasibly navigate the healthcare system without ever leaving the United umbrella. They could have United Healthcare as their insurer, see a doctor that works for Optum Health, and have their prescriptions covered under Optum Rx. They may even pay their medical bills using Optum Pay technology.
United is a unique company in that while they're one of the largest managed care companies with over 40 million people having health insurance through them, that's really only half the business. The other half of the business, which they call Optum, are a series of services businesses, many of which service their health insurance members, but they also service other people.
Optum can be split into three general businesses. Optum Health, a series of physician practices. Optum Rx, which is a pharmacy benefit manager, the so-called middleman between drug manufacturers, insurance companies, and pharmacies. And Optum Insight, which is a data and information business that focuses on analytics to monitor things such as cost and manage risk.
Think about.
All right, I'll pause it right there real quick. What I was mentioning earlier when we were discussing the revenue, they reported in 2022 that United made an estimated $250 billion. The company I was referring to that I think they were talking about is United Healthcare. It's a health insurance company that United Health Group owns. Last estimates I saw, United Healthcare actually made up roughly 70% of the revenue that United Health Group makes.
Amazon or Apple, the way these tech companies create this sort of virtual ecosystem that you can stay within, that's what these healthcare companies are trying to do in terms of being able to offer you not just the insurance, not just the pharmacy benefits, but also the medical care services so that there's more coordination and hopefully people get healthier because it's all tied together.
The diversity aspect of its business makes United Health an attractive stock for investors.
The health plan arm of the company works synergistically with Optum. The improved medical cost then fuels their health plan growth and their profitability, and that can then drive the innovation both through a build strategy organically, or they can do targeted acquisitions within Optum.
United Health set a precedent with its growth strategy, which has now been adopted by other major players in the sector.
What you've seen in this...
Pausing it here real quick, I just want to highlight a few things. For one, we can obviously see that the largest graph on the screen is United Health Group. It clearly outperformed all of its competitors. In addition to that, it has also outperformed the S&P 500 religiously over the course of its existence. For those of you that have done any investments into pharmaceutical companies or health insurance, you'll know that the individuals and the companies on this list are heavy hitters. These aren't just some small cap stocks that they picked out of a hat. For that reason, again, I think it highlights the strength and the sheer moat that this company has.
Space is because of Obamacare and the medical loss ratio, which was basically a profit cap on insurers. The insurers decided that to get around the medical loss ratio, they would buy providers and adjacent businesses. So that's really when United Health Group's Optum subsidiary really expanded their pharmacy benefit manager. They started buying doctors' practices and software and analytics firms.
When Obamacare came into view in 2014, a lot of United's peers said, oh, we've got to get bigger in terms of being insurers. So you saw Aetna and Humana try to merge. You saw Anthem and Cigna try to merge. And those mergers got tied up in antitrust because it was too much in the same area of integration. What United Health has done is they've done what we call vertical integration. So they kept buying smaller companies and building them into the Optum services area. And because there wasn't that sense of, well, United Health isn't really the biggest physician practice at the time, they were able to buy those, and they didn't really raise any concerns with the antitrust regulator.
All right, we'll cut the video right there and we'll start taking a look at some of the financials. But there are a few key things that I want to highlight before we move on that they didn't mention or they didn't get to yet. For one, United Health Group is now the largest employer of physicians in the country. I believe the last estimates were they had over 70 million doctors on hand that were directly working for one of their businesses. In addition to that, they are a huge player in the Medicare space. And lastly, as you'll see coming up, this company is very well managed. So starting at the top, as we always do, let's take a look at it. We can see now that United Health is currently trading at $547. If we jump down to the valuation section, we can see that they have a market cap of $500 billion. So this is a huge, huge business. Current PE is 23 and the forward PE is 21. After taking a look at their historical PE averages, that is pretty on par. I believe in the last 10 years, their PE median nets out to like 18 or 19. So I have no problem paying a slight premium for this company. Take a look at the balance section. We can see that on hand they have $44 billion and they're currently in debt $58 billion, which nets out to negative $14 billion. That's obviously something I don't like to see. I don't like owning companies with a significant amount of debt unless they can pay it off quickly, which United can absolutely do. Obviously, I manage a dividend portfolio, and the dividend yield for this company is 1.37. So on the lower side, but again, you're buying into a highly, highly profitable company, so they know they don't have to pay out a large dividend. On top of that, their payout ratio is only 30%. So that means 30% of their net income is paid out in dividends, and they can use the rest of that money for whatever they want. Let's check out the revenue, and it is skyrocketing over the years, just going up and up. Taking a look down here at the bottom, we can see that in the last year, their revenue has increased by by 13%, and in the last 10 years, it's increased by over 11%. As for the EBITDA, it looks very healthy. It follows the revenue. In the last year, it's up 20%, and in the last 10 years, it's on par with the revenue of over 11%. Taking a look at arguably the most important financial factor you want to take a look at if you're buying into any company, and that is free cash flow. Clearly, making money is not a problem for this company. It has historically gone up every year, with the last year going up over 17% and in the last 10 years increasing by more than 14%. That is a great average for any company. We can see that in 2022, they made $23 billion. Let's take a look at their stock-based compensation, and it looks very reasonable. Out of that $23 billion they made, they only paid their employees $925 million. One important thing to note that I always take a look at, and that is if stock-based compensation is continuously going up with the free cash flow. It looks like in this example, it's not. At least it's not a substantial amount to where they're offsetting their profit. So great sign in my opinion. Taking a look at the net income, and it resembles the free cash flow, the revenue, the EBITDA, continuously going up year after year. Now taking a look at the cash to debt ratio, this is one concerning factor that I don't necessarily like with this company, but it's something that I will deal with because I know they could pay their debts off if they need to. And that is, of course, as you can see on screen, their debt is increasing year after year since 2015. With that being said, it looks like their income and their cash on hand is increasing as well. Checking out the dividend, it is very healthy, historically being raised every 4 years. In the last year, it's up 14%, and in the last 10 years, they've raised it by 21%. That's huge if you're a dividend investor, and it only adds to that compounding over time. Taking a look at the outstanding shares, we want to see, hey, is this company diluting its shareholders? And it looks like they are not. They are continuously buying back their own shares, further increasing the price of their stock. Another very important financial metric to look at when you're going to invest in any company, and that is return on capital employed. So we can see that last year they had an 18% return on capital employed, and historically it stayed around that same mark, and some years it's gone up from there. So that's very healthy in my opinion, and I think it is above average for most companies in the market. This signifies to me that they know how to manage their money and employ it and get a return on that money. Another key takeaway that I want to highlight for you guys, and that is the fact that this is one of the most commonly held stocks out of all super investors' portfolio. So if you take a look right here, you can see that on the left-hand side, the top 10 most owned stocks, you can see in 9th place is United Health Group. In addition to that, they have Microsoft, which I own as well, Visa, which I've been buying into religiously, and now the new addition to the portfolio, United Health Group. If you're interested in seeing all the portfolios that own United Health Group, you can see them on your screen right here. Feel free to pause it or take a screenshot to look a little bit closer. If you guys are interested in seeing me dive into some of these portfolios, leave a comment down below and we can do that in the future. Now, going back to my portfolio, let's wrap this up. I told you guys that I'll be telling you if I still think this is a buy with its current PE and price in the market. And because I use Robinhood, they have an integration with Morningstar that will also give me some additional information to look at that I think will be helpful to you guys as well. For one, do I think United Health Group is still a buy? Yes, I absolutely do. I think when you take a look at the financials of this company, it speaks for itself. This is a company that's highly profitable, has a highly entrenched position within the market that is very difficult to upset, and has a great track record of running their business properly. If we take a look at some of the analyst ratings from Morningstar, we can see that they have it as a buy right now. If 81% of their analysts say it is a buy, 14% of those say it's a hold, and only 3.7% say it is a sell. If we take a look at what the bulls say, it says United Health has managed its balance sheet more conservatively than peers, giving it more flexibility in times of change. That's a great point. This company has performed very well during recessions. If we take a look at what the bears say, it's essentially pointing out that it's going to be hard to maintain its same earnings growth over time. I personally disagree with that because they've already proved that that is not the case. They're making acquisitions, they're keeping cash on hand, they're buying back their own shares, and they're essentially attacking the healthcare market from all sides. Taking a look at the research report real quick, we can see down there at the bottom, the fair value that they have estimated for United Health Group is $462 per share. As for the economic moat, it says narrow. Again, I don't agree with that. I think they do have a wide moat, especially with all the acquisitions they've made in the last 5 and 10 years. I think they have solidified themselves as the dominant healthcare provider in the United States. Uncertainty, they have it as a medium, which is good, and stewardship is exemplary, which I think we all knew by looking at the financials of this company. So to wrap this video up, let's take a look at my stock. I have them organized as far as my weighting in them. So Microsoft is my largest holding. Then I have SCHD, just under that, Apple, Visa, Vici, and then my new addition to it, United Health Group. I'm going to continue buying into this company. I want to have it at roughly a 10 to 15% of my portfolio within the next few months. If you guys have any questions about this video or you found it informative, make sure to let me know down in the comment section below. Don't forget to like, subscribe if you enjoyed this, and like always, I will see you in the next one. Take care.